Hello everyone, welcome back to the artoftrading.net video. This is Trader Stu with you again. I just want to do a video for you guys on how to properly trade a breakout. Okay, we've seen many videos about how, breakout trading, what it is and how to do it, and so on and so forth. But for me right now, I'm going to talk about how I trade a breakout and how I would prefer anybody who subscribes, with me at theartoftrading.net, how I would prefer them to trade a breakout as well. Just because, breakout trading it's a little bit tricky, a lot what you see on Twitter or what you see on, on many services, what you'll see is you'll get a setup. And for example, like say, you get a setup and says, breakout over 20. So automatically, what do inexperienced traders? The first thing they think about, oh, well, the stock is over 20 now. This means I should buy it. That's not necessarily how it works. Actually, that's exactly not how it works. To be honest, just because a stock goes through a price level that you're watching, or or triggers through a setup, through a price setup that you've been watching, that does not mean that it automatically turns into a trade. That's way too easy. That's not how it works. There's many things that need to come together before a good trade or a good setup is in play, and therefore you should take it. So I'm gonna go through it real quick. Maybe do a 10-15 minute video and talk about how to properly trade a breakout, the art of trading .net way. Obviously everybody has their own way, but this is my way, and this is the way I would rather see people who subscribe here or follow my method. I would rather them see them trade breakouts, in the way I'm about to explain it right now. So basically, a very typical setup that I look for here at the artoftrading.net is basically a setup in a stock that has a good trend already. So for example, I'm looking, this is one way I like to I post setups here is, for example, here the stock that caught my attention is DAR. Um, it's a stock that I've been watching for quite a while, ever since it gapped up here. As you can see here, a stock that gaps up like it did right here on huge volume. See that right here, guys? A stock, it gaps up right here on huge volume. That does not mean that we're going to take the trade today necessarily, but it's a trade, it's a stock that we need to watch in the next few days and see how it sets up, because you cannot enter a stock after it gaps up, 6, 7, 8, 9, 10%. You'll be chasing at that point, and that'll make the trade very risky, if you start to buy a stock when it gaps up like this. So the best thing to do is just to wait. Give it a few days, 4, 5, 6, 7, 8 days, 2 weeks, however long it takes, till the stock sets up for you again. Stocks that gap up like this on this kind of volume typically, keep running in the direction of the gap. So don't take the stock. Don't chase the stock. However, don't remove it from your watch list either. Keep watching it. And as you can see here, guys, after it gapped up and digested the gains for a few days, it started to give us kind of like an ascending triangle or a bull flag type pattern here. And as you can see, guys, here how the low 18s here, it was starting to turn into resistance. As the stock struggled here to break, it went to 1809 here and stalled out and then dropped. Came back out, gathered some more strength, came back to 1816 here and then dropped again. So as you can see, guys, the low 18s was starting to become an issue for the stock, for DAR. And I've been watching this stock for a few days, and I realized, that hey, it might be time to start to post this setup to the subscribers, because it's looking like it's starting to reach a situation here where it might actually break out. And at this point, as the stock nears 18 for the third or fourth attempt, as you can see here, it tried it once, failed, tried it twice and failed, and now it's approaching 18 again for the third time. And I knew that, I had a pretty good hunch that coming into the third time or the fourth attempt to break 18, it would be a good one. So right away, I shot off this setup to subscribers, telling them to get long this stock over 18.15. I think it was the alert price. So over 18.15 would get you long into the stock. However, there's many ways to play it. You don't have to wait till 18.15. If you look at this setup, take a look at the market. If you feel like the market's about to make a run, why wait for a breakout? Why not enter a little bit early? Why not enter at 18, 18.05, 18.10 in anticipation of a breakout, and then ride the stock as it's breaking out. So this is one way to play it. Another way to play it is you always want to wait for a stock to, let's say you have okay, the alert price for this one was at 18.15. So for example, rather than wait till for the stock to hit 18.15 and then you buy it automatically, what you want to do is you want to see how the stock is setting up on multiple time frames. For example, as you can see here, this was the ascending triangle. This is the 30-minute chart here, and you can see here there's a beautiful ascending. It's very visible on the 30-minute chart. It's a beautiful ascending triangle here, a bull flag type pattern. And as you can see here, you have a flat top here, followed by rising lows. Look at that. You have a rising low here, another rising low here, another one here, here, and here, and here. And you can see how the stock is starting to squeeze into this very sweet little into a tight little coil. See that it's coiling up real tight. So you knew a breakout is going to be very imminent here. So anybody who's anticipating something like this, you could buy the stock here, you could buy it here, you could buy it here in anticipation of a breakout. Put a stop loss underneath this trend line as the stock is rising and making higher lows. You can use this area here for a stop loss, here for a stop loss, here. Anywhere underneath these rising lows would be a good stop loss area. So basically, what you want to make sure is that there's a base, that there's a good solid base before you buy a breakout. Just because a breakout takes place at 18.10 or 18.15 doesn't mean that you have to buy it right away. You want to wait and see. For example, if the stock gapped up, let's say the stock is at 17.50, and then the next day it gaps up at 18.20. You don't want to be just because it's over 18.15 now. It opens at 18.20. That does not mean that you have to chase the stock. Just wait. Never ever chase a gap up. Always wait for there to be a base, and after the base is built, then you can look to enter the stock at a good risk reward entry. So that was the 30-minute chart. As you can see, our 30-minute chart in DIR setting up in a sweet ascending triangle. And as you can see, guys, it was a sweet pattern here on the 5-minute chart. This is what it looked like here, guys. You can see here how 18 was a sweet area right here, guys. Look at that beautiful little pattern. But this is what I want you to pay. This is exactly what I want you guys to pay attention to. How a stock approaches a breakout number. Okay, as the stock was approaching 18, the whole 18 number, 1810, 18 to 1815, that whole area right there, look what happened, guys. Check this area out very closely. This area right over here. Okay, look at this. Okay, this little area right here, it seems insignificant when you take a look at this chart and it's as a whole. This little area here seems insignificant. However, this little pocket right here of consolidation, this right here is basically what made this pattern, believe it or not. Okay, basically rather than the stock test 1750 here on the open, you can see here, guys, on May 26th, the stock gapped down, tested lower level, and then quickly reversed. However, it did not just quickly shoot off right here. What the stock did is it slowly trickled higher and then tested 18 once again. Look at that. Tested 18 here and then stalled out. However, this time, look at this, guys. It started to move sideways in these narrow candles, very small candles, consolidating ahead of what was going to be a breakout. So for my money, I would have entered a stock either here on a breakout above this candle at 1806, 1810, right here, which is basically where we alerted subscribers to enter around 1810, 1815, which is 1806. So some subscribers in the chat room entered the stock around in this pocket right here. And as you can see, guys, this pocket right here basically what set up this whole breakout. Because rather than shoots right through it or gap up right above it, what it did is it consolidated right underneath resistance. You always want to see a stock consolidate underneath a very, very important breakout area. The longer it consolidates and it breaks out, the more meaningful that breakout is going to become. So for example, here it consolidated, for a good, 30 minutes to over 30 minutes, maybe like an hour, hour and a half. It consolidated here, went sideways, consolidated, digested, and then as soon as it broke out, guys, look at that. The volume started to pick up. Volume started to pick up down here, and the stock went into a monster run, beautiful run. My target for this trade was, so the entry was 1815. Some subscriber went in at 18, 1805, 1810. My target was 19. A lot of people sold out at 19. That was the target price for this trade. Some guys sold it at 1850, 1877, 1875. Basically people sold it as it started going higher, and nothing wrong with that. You always want to sell a stock as it's going higher, especially in a choppy market. A market where normally breakout trades don't work. In a choppy market, breakout trades do not work. Therefore, when you do take a breakout trade, you always want to be very, very picky. You want to be extremely picky. You want to pick a stock that's in a very, very good trend like this one. Gaps up on a huge volume, consolidates for a few days, give you a sweet little triangle here. On the 15-minute chart, the triangle is just gorgeous. It's setting up here beautifully. A flat top, rising lows right here. As the stock consolidates on 18, it tried several times to break 18. It failed. But the stock kept giving you those higher lows right here. So the stock was still acting very, very well. Even though 18 was an issue, it was acting very, very well. That told you as soon as it broke out 18 or the 1810 area, it was going to make a big run, and indeed it did. But however, you do not want to enter it just because it broke 18. You want to wait for a consolidation under 18, or beautiful resistance consolidations right under resistance like we saw over here. And look at that, guys. As soon as it broke 18, on volume started to come in, and it went on to a huge run. And many, many subscribers, made a good trade out of this one. And I hope, guys, this helped. And this is how I would expect people to trade a breakout. When they do join the autotrading.net. You don't want to chase a breakout on a gap up. You don't want to chase breakouts when the stock starts to spike through a breakout price. You always want to wait for the stock to give you indication that it's consolidating under resistance. And the longer it consolidates under resistance, the more meaningful the breakout's going to be, and therefore you can have confidence in that breakout once it does happen, because you had a beautiful consolidation, a base building process under the breakout number. And once the breakout number does come, this breakout is free to run. It's going to run hard and fast, so it's going to give you a very good trade. Anyway, guys, I hope this helped, and hopefully we'll do more videos in the near future. Take care, guys, and good luck.